Hello guys, and welcome to this video. I recently released version 1.2 of the Ultimate Breakout System, and in this short video I will try to explain to you the new features that I implemented and give you some more guidance on how to use the update. Alright, so the first thing I've added was the grid system. For those who don't know what a grid system is a system where you basically keep adding trades if the trade goes the wrong way. So it is a risky thing to do because there basically is no stop loss anymore on the trades. And your assumption is that the price will eventually move back in the right direction and then the software will close the whole grid of trades into a profit. I've added this because some clients were asking about it. I personally don't really use grid systems a lot. And if I do, I always manage them manually in case things go really bad. So here you can see the grid systems settings. It's right here below the magic trail options. First of all, to enable it, you have to put it to true. There's some default values here, which I will talk to you a bit about later. And an important thing when you're going to enable the grid system is you have to disable the stop loss settings. So most importantly, the trailing stop loss and trailing take profit, because we want to avoid that the EA will still close the initial trade with a stop loss or with a take profit, because then the grid would be messed up. So for that, I'm using in this example the default settings, which are for gold, and I'm going to disable some of the things that are used normally to exit the trade in a loss. So the stop loss we can leave because the grid system will disable it by itself, but the trailing stop loss, we must make sure that it doesn't put any stop loss below the entry, so in a negative territory. So in this case, it normally has a trailing stop loss of 750, which starts at 250. That would mean it would start at minus 500 pips if triggered. So we can simply adjust this to 800, which will mean that once the trailing stop loss starts at 800, it will have a trailing stop loss distance of 750, which is above the entry price, so it's already positive. So it won't be triggered during the grid. Then the next thing we have to adjust is the trailing take profit. Basically, we're going to disable it because we don't need a trailing take profit. The trailing take profit usually means that if price goes in the wrong direction, it will trail the take profit even into negative territory and will try to exit with a small loss instead of going to the full stop loss. We don't need it when we're using grid, so we simply disable it. Also, the break-even settings, it's best to just disable it. These high-low trailing stop loss settings are disabled by default, so just leave them disabled. So basically, all the trailing stop loss should only start in profit and make sure that no stop loss is triggered in a negative value. Other than that, the grid system should now run normally. For this example, we can just leave the default settings to give you an example how grid works. So let's run a quick back test. You can see basically it doesn't take any losses. It will just go up, try to always recover any losing trades. You can see the risk of a grid system is, of course, you get bigger drawdowns like this one. The spike down is an equity drawdown. Overall, we ended in profit, but you can see it has a equity drawdown of almost $1,800 at the minimum lot size. So this is running at 0.01 lots. And it has, so the smallest possible lot size, and it has a drawdown of 1800. So you can see the potential risk of grid, but some like it, so I implemented it. So next I'm going to explain a bit about these parameters that you can set for the grid system. So first, I already explained enable grid, which basically enables a grid after you managed to take away all the stop loss and trailing take profit settings to make sure the grid works as it should. Then the grid start distance in pips, basically the word says itself. It's where the grid will start after 50 pips, in this case, in negative territory. So if the entry price is triggered and the price starts going in the wrong direction, like 50 pips in the wrong direction, the grid will start with first trade. Next up is the grid step in distance, which is basically the distance in between each grid trade. So it will start at 50 pips. The next grid trade will be at 20 pips extra, 20 pips extra, 20 pips extra. So this is basically just a very simple way of saying the distance between each grid trade. Then the next parameter is the grid check time frame. This is the period you will set in which the EA will check the grid routine. So basically, if you set it to 1 minute, for example, every minute it will check to see if it has to do something regarding the grid. For example, put the next trade or close the grid. Then we have the total pips of take profit. So this is the number of pips at which the grid will close all of its trades. So if you set it to 10, for example, it will check all the pips in profit from each trade of the grid. And when the combined profit is more than 10, it will close the grid. I don't use this much because it's easier to just put it in dollar profit, which is the next one. So let's just keep this one to a bigger value. Total profit for take profit. So this is the next one. This is the dollar amount or euro amount or yen amount. So the currency amount at which the grid should close its trades. So basically, if you put it to 50 and the grid is, let's say, 5 trades open, once the total grid profit is $50 or more, it will close the grid. So this is the exit point. We also have a negative one, the max loss for stop loss. So this means that if the total amount of loss of the open grid exceeds this amount, so it's the equity drawdown, then it will close the grid. If you keep the value to 0, it will never close the grid in negative, so it continues to add more trades, basically until you get a margin call. But with this parameter, you can prevent an account blowing up by setting a value, for example, minus 1,000. Then it will close when the grid exceeds $1,000 in equity drawdown. So we can see in this example, we had a 1,800 drawdown. So normally if we put this one to minus 1,000, it should have a stop loss somewhere, which we will test to show you. Here we go. And there's a loss. So you can see now the grid closed at 1,000 loss. Of course, this is a big loss, but that's what the risk of grid is, of course. So. And then the last one, excuse me, the last one is a grid multiplier, which basically will make each consecutive trade of the grid increase in size. So if you put it to 1, it doesn't increase anything in size, the lot size. But if, for example, you put it to 2, that means that every new grid trade will be 2 times the volume, the lot size of the previous one. So it will go from 0 to 0.1 to 0.02 to 0.04 to 0.08, etc., which is basically a martingale. You can also use like 1.5, for example. Let's see what this gives. We're going to keep this one back to 0, just to give you an example of how the grid will build up. So you can see the jumps are more bigger now because the lot size increased. Potentially this could have a lower drawdown because there's a quicker escape from the grid, since bigger lot sizes add quickly up to a bigger profits when the price reverses. So we can see here in the deals, for example, here we have the first, this is the initial trade. These are the consecutive grid trades. So the first one is 0.01 lots and the next one is 0.02 lots. And then it will build up. Here we can see another one, 0.03. So that's how it will build up the grid. All right, next up, what did I also add in this new version? I had some prop firm settings for those who run prop firms. Just to make it a little bit more easy to use the EAs on prop firms, there's 3 things I added. First 2 ones are basically parameters that make the EA stop trading when a certain amount of equity is reached. This can be useful, for example, if you have a 100,000 challenge account and you want to reach 100,000, 110,000 to reach the target. You can simply put, for example, close all trades at maximum equity, 110,000. This will make the EA close all trades and stop trading. So the EA will completely stop once the equity reaches 110,000. Why can this be useful? Because sometimes you have open trades and they go above the 110,000. So you basically reach the target, but they're still open trades, so they still might reverse, close a negative, you didn't reach the target. So some clients ask me, is it possible to add this, that once I reach the target of the prop firm, it will close all trades and stop trading. So you can do this. You can do that with this parameter. And also the other way around, you can have like a minimum equity. Let's say you want 5% maximum drawdown before completely stopping the EA. You can simply put here like $95,000. In this case, when the trading is going and the equity falls below, $95,000, the EA will simply close all trades and stop trading just to prevent you don't exceed the 5% and that you don't blow your challenge, basically. And then the last one, the max daily drawdown. Most people will know what this means. Most prop firms have a limit of the maximum daily drawdown you can have. This you can put there. Let's say, for example, if you have 5% maximum drawdown, you just put 5, or better, you put 4. You always want to have a little bit cushion, 4%. So if the daily drawdown in total of the account, so it will look at all the trades from that day that were closed, including the open ones, if that exceeds 4% drawdown, the EA will close all the trades from the EA itself and wait till the next day. So it won't close trades from other EAs because that would, people won't like that, I think. So it will close its own trades and stop trading for the next day. All right. Then the next features are more related to lot size settings. I've added one more lot size calculation method, which is now not only risk-based on trades, risk per trade based on percentage, but also risk per trade based on the dollar amount, the euro amount, the yen amount you want to set. So for example, you could set that you want each trade to have a maximum loss of $100. You can easily do that here. Let's first go back to defaults settings to make sure that we're not trading the grid anymore. For those that don't know, the default settings are for gold, but if you put variable values 1,000, it actually adjusts the prices better to the actual gold price, which makes the growth curve a little bit better. So let's, for example, lot size settings, not the manual lot size, but we want a maximum risk per trade of $100, and it will adjust the lot size for each trade to maximum $100 loss, as you will see in this example. There we go. All right. Let's see the deals, and you can see the lot size is variable. It's not fixed lot size anymore because each trade might have a different stop loss size based on the price of gold. And if we take the most negative profits, are $100 basically. These might seem smaller. One can be the reason because the stop loss was already trailed a bit or something like that. So it's not a full stop loss. Or the lot size is not rounded. 0.045 might be the actual lot size to have $100 loss. So it rounded down to 0.04, which made minus 88. But the max loss will always be minus 100. So what else did I add in this new version? Let's keep this back to manual lot size. I added the adjust lot size to variable values. What are the variable values? I explained in my previous video. The variable values are settings that you can use to adjust the prices, the values of the stop loss, entry, trailing take profit, everything based on the actual price of the market. So for example, for a market like gold, which has the tendency to rise over the years, a couple of years ago gold was around 1,000, now it's around 3,000. So the stop loss values and the take profit values need to adjust automatically. That we can do with the variable values. Of course, if the stop loss increases over time because the market movements are getting bigger as well, if we keep the same lot size for a bigger stop loss, the actual loss increases. So if we want to keep the same risk, even if the variable values are adjusted over time, I added this new parameter to do that. So for example, let's say we want to use 0.01 lots. This will now be based, if we enable this, the 0.01 lots will be based on the gold price that we set here of 1,000. Which means the risk of 0.01 lots will be calculated on a gold price of 1,000, with the stop loss also based on the gold price of 1,000. So now we're around 3,000, which means that stop loss is almost 3 times as big probably. So the lot size should be 3 times as small to keep the same risk. So if we run a back test like this, you will see that the lot size will decrease over time just to keep the same risk per trade basically. So we can see the gold price. I mean, with the entry price, we can see the gold price, which is here, entry price. So we can see when gold was around 1500, we had a volume of 0.06. So to calculate, we would have to take 0.1, sorry, divided by 1581 times 1000 would be 0.06, which is what we see here. And as gold price increases to the end, as we are now around 3000, you will see, check, I have to, of course, order by time. 3000, the lot size is around 0.03. So the lot size is adjusting automatically to the size of the stop loss that is increasing over time. This new feature will only work when using manual lot size or lots per balance, because it's the only two that makes sense to use it. If you want to use risk per trade, you basically are saying, I want 2% risk per trade, for example. It makes no sense to adjust then the lot size, and then you'll have a different risk per trade. So you actually want to keep that risk per trade. Same case for the risk per trade in dollar or euro, etc. Now, if we're going to use this new parameter, adjust lot size to variable values, excuse me, then the approach to setting the risk for each strategy and to create a balanced portfolio is a little bit different. I will show you with the example and compare the two. So in this quant analyzer, I already imported the two back tests, one with a fixed lot size and one with the new parameter used, adjust lot size to variable values. So you can see already in the growth curve, this is the original one, so the previous version basically, that the growth curve is always getting more and more exponential basically. So towards the recent years, the profits and the losses are bigger and bigger, so the curve is getting more and more hectic, and the drawdown as well will become more and more, will become bigger and bigger over the years. So it's very hard to predict in the future how big the drawdowns will be if gold price goes to 10,000. So if we would use like a lot size step of 1,000, it won't make correct lot size for the risk that we want to have. So when we use the adjusted lot size for variable values, you can see that the growth curve is much more like stable over the years. The way it moves up and down over the years is basically the same, and your drawdown periods are also basically the same. So it's much better to set a risk using this new feature. So at least when the gold price changes over the years, we know that our risk will remain the same. Now, in order to calculate the risk, the approach is a bit the same, but we have to do a couple things a little bit different. First of all, the backtest we did wasn't with 0.01 lots, because then you cannot go lower than 0.01 lots, so we wouldn't see the difference of the lot size over the years when we do a backtest like that. So we want to see at a bigger lot size, for example, for gold, 0.1 lots. Over the years, what is the what is the drawdown at 0.01 lots? In this case, the drawdown is 518. And I'm confident that with these settings, that if I set a value of 0.1 lots for gold, with the adjusted lot size for variable values, this drawdown would not exceed this $518. So we know if we want $518 drawdown, and let's say we want, for example, a max drawdown of 10%, just to make it easy, that would mean a lot size step of 518. Why 518? Because the 518 drawdown is at 0.1 lots, and we always want to revert it back to 0.1 lots for the lot size step, because the lot size step literally takes the balance per 0.01 lots. So in this case, we would run a lot size step of 518. Let's do that in our example. So we had here gold. I'm going to take a little bit, because else the backtest would take too long. Manual lot size. I'm going to say lot size step, lots per balance, and a lot size step of 500. Did I say 518? So let's make it 520, because we wanted to stay below 10% drawdown. Let's take an example of $50,000 is okay. I run the backtest. So it will now automatically adjust the lot size and will keep the drawdown below 10% normally. I'll skip this Oh, it's going fast, so we can wait and let's see what it gives. Almost there. So you can see that the growth curve is now exponentially increasing as well because we're using an automatic lot size based on the balance. Balance is increasing, so the lot size is increasing as well. But it's also adjusting the lot size based on the increasing stop loss value because stop loss is getting bigger over the years for gold. So we have to adjust our lot size. See the back test, and it's around 10% as expected. So this is the way to adjust your lot size step when you're using this new feature. So let me recap that one more time because it's important that you get this right. So if we adjust the lot size to variable values, the way to calculate the lot size step is a bit different, not completely different, a bit different. We run the back test at a higher lot size, for example 0.1 lots. So we get the drawdown at this lot size. And we know that with the adjustment of the lot size to variable values, this drawdown is something we can count on to be stable for over the years. And then we're going to calculate this back to 0.1 lots, 0.01 lots. So basically 518 was at 0.1 lots, so at 0.01 lots, of course, it's just divided by 10. So we know at 0.01 lots, lot size is 50, drawdown is $51. And based on that, we just set the lot size step. So 10% would mean a lot size step of $518 in this case. All right, so that's the end of this video regarding the new features of the Ultimate Breakout System version 1.2. I hope you enjoyed this video and you learned how to use the new features. If you don't know what the Ultimate Breakout System is, I really recommend clicking on the link below. That will take you to the product page, which explains everything to you need to know about this wonderful system. Thank you for watching. Don't forget to like and subscribe, and hope to see you soon.